How are you approaching the markets from here on?
Well, I think just to step back, I want to kind of point out that we're in a new era of financial markets, especially with the Fed-induced, what I would call quantitative easing infinity that has been triggered. And because of which, financial assets like equities, are doing extremely well. Well, given the record low real interest rates, which is negative in the United States, it really means there is no option but to move to equity as an asset class. Also, the conditions that were there for the dollar to remain strong have weakened, and because of which the dollar is also weakening. Those bode very well for equity assets, including of those in India. So the decline in equity markets that you saw in April, March was triggered by global events, and the rise that has been seen in the Indian markets are also due to global events. So what I want to place here is that whatever you're seeing in the market is really a global driven events that are driving equity markets. As far as India is concerned, as we speak today, I think I am a little apprehensive of where cyclicals how cyclicals, especially domestic cyclicals, can move, as you move forward, because some of the data that you were seeing, which was increasing from, let's say, May, June, and July, has started to kind of flatten out. So that's one. And second, of course, the rise in cases in coronavirus in India has still been continuing to climb. Of course, I think shutdowns are ruled out, but could it impact consumer sentiment or have supply constraints is something that we'll have to watch out for. So at this moment, I am a little apprehensive as to how you should value cyclicals, as you move forward. Also, given the context that the government of India doesn't have adequate money to push this economy higher like it has been done in global markets. So to that extent, I'm a little apprehensive as to how the rate of economic momentum post this initial rise will be, let us say, in 22 and 23. So from that context, I'm a little apprehensive as to where cyclicals are.
Okay, but where would you put your money in right now, Rajesh?
So one sector that I want to look at as to how it unfolds over the next 1.5 months is really IT. Given the work from home environment, no corporate among the top 1,000 in globe wants to be left with its IT infrastructure on premise. They want to move it to the cloud as rapidly as possible. And given how the trend of digitization has accelerated, my sense is there's going to be a lot of work that companies will put in to digitize their infrastructure. And that really bodes well for IT services companies. And my sense is that they will accelerate the growth rates of IT services companies. And, my sense is I'm looking forward to seeing if there are upgrades that come in, come October by some of these IT companies. Of course, there is some apprehension about currency, but my sense is that's not such a big constraint for some of these IT services companies to do well. So my sense is, yes, IT is one sector that I would be looking at. I think the other sectors that we've always been positive on, which is things like insurance, general and life alike, we continue to kind of like those plays. Fortunately, I think they will do well regardless of the strength of the economic momentum or even if the lockdown plays kind of continue. So my sense is things like insurance or IT certainly appeal to me.
Insurance and IT, and any specific names there in the IT pack, Rajesh?
Unfortunately, we can't discuss names, but I would say I am seeing a lot of acceleration in the larger or even mid-cap IT. I think across the sector there is acceleration, and of course, I think there is one company which has probably the second largest, and it is moving towards restructuring itself, and which had lost a lot of margins in the past. I think there is not only scope for that company to move the top line growth, but also improve its margins over the next 2 or 3 years. And the valuations are benign. So I would say companies like that, but I would say across large caps and mid caps, we are seeing a lot of acceleration that is possible for these IT services companies.
Global cyclicals, you were not very sure, but I suspect you want to have long positions there as well. But because you said you're not sure. I mean, the environment will be benign, dollars lower, etc. But
Right.
you're saying that tough to value some of these.
I'm necessarily referring to domestic cyclicals, really, because I don't know what is the strength of the economy going to be.
Right.
Apart from this initial bounce that you're seeing, as you move forward, are you going to have a strong kind of recovery? Only because I think whether you require a fiscal stimulus, clearly. And what is the strength of the fiscal stimulus that is going to be is something that, I'm not confident of. But of course, never underestimate the government to raise resources. But my apprehension is that the strength of the economic recovery is something that I would watch out for, And so what I mean is that some of these stocks are dependent on the strength of the economy, and the valuations now reflect that these will continue to do well and the recovery will be very strong. So that's really where I am apprehensive. Equally, the valuations are as comfortable in some of these non-cyclical names. So my shift would be more towards these non-cyclical names like IT and insurance companies. Or for that matter, you are seeing the largest stock in India, do quite well. And see, this is an environment of wherever there are new growth opportunities, right? You've seen the technology sector in the US, you've seen it in China, and of course you're seeing the evidence of that in India. I think given where interest rates are, these companies which are in new growth sectors, particularly related to which building a network, I think are really going to do extremely well as we move forward.